Hello, I'm Paul Single, Managing Director here at City National Rochdale, and welcome to Economic Perspectives. With the value of the dollar trading off earlier in the year and the price of gold moving above $4,000 per ounce, we're receiving many questions about the dollar and its status as a premier reserve currency. Much of this discussion of the dollar's reserve status revolves around numerous geopolitical issues, which also is a significant concern for many of our investors. The purpose of a reserve currency is to facilitate global trade. So let's take a look at some of the charts. As you can see here, international trade has been on the upswing. This is especially true in the past few decades. World merchandise trade is close to $25 trillion per year, almost 4 times larger than it was back in 2000. And the increase in global trade has also been helped by the U.S. Navy patrolling sea lanes, ensuring safe passage of ships, also the invention of the shipping container, and of course the reduction of tariffs. A key tenet of international trade is that the seller gets paid a fair price for their exports. The large share of exporting countries cannot receive payment in their currency from the importing country, thus the need for a central bank to facilitate the currency conversion. Central banks around the world will hold government securities to ease that process. It reduces market volatility, minimizes exchange rate risk, and other risks and concerns associated with the transactions. The IMF, the International Monetary Fund, recognizes 8 major reserve currencies. The US dollar is the most held, making up the vast majority at 57%. In this chart, you can see the usage of the US dollar as a reserve currency has moved around. The sharp decline in the late 1970s was a result of currencies around the world becoming fiat currencies, where they are no longer linked to the value of gold. As a result, governments around the world, they look to diversify their risk away from the United States. Their concern was with the monetary policies that they had in place and the sanctions that were roiling the financial markets back in the 70s. And they were developing their own financial market infrastructure. But since the 1990s, the use of the dollar-denominated foreign reserves has increased mainly due to the strength and stability of the currency and the economy. For some historical context on the US dollar being a prominent reserve currency, it dates back to the Bretton Woods Conference in 1944, which established rules for monetary order of the post-war global world. The US economy was the largest economy in the world by a long shot, and it also controlled more than half of the world's gold. The new rules made payments of international trade far more efficient, which was a significant goal of the conference. The policymakers wanted to avoid the policy mistakes of the Treaty of Versailles after World War I, which led to isolationism, imposing high tariffs, and a high level of tension among neighboring countries. Conference members believed the economic efficiencies of international trade would encourage stronger relationships among nations and reduce the risk of future conflict. In the early 1970s, the global currency links to gold began to be severed. Even with that, the United States dollar has remained the world's foremost reserve currency. This is due to the stable value of the currency and the size of the economy and capital markets. Both are the largest in the world. And of course, the country's geopolitical heft. It's important to note that the dollar's role in international payment systems should not be taken for granted. The U.S. economy has significantly benefited from that role, such as other countries buying U.S. Treasury debt, which helps lower the yield, allowing the government to finance its debt at a lower cost. Over the years, there's been numerous articles written about concerns regarding the dollar's dominance. Most recently, following the global financial crisis, the COVID pandemic, and the beginning of this year, but nothing has happened. Now, there are financial and geopolitical incentives of other countries to dethrone the U.S. from that role. That said, it would be difficult for them to do so. Among them is BRICS, which is an acronym for Brazil, Russia, India, China, and South Africa. For years, they've discussed creating a new shared currency. That is not really feasible due to many structural challenges that they have, including weak monetary policy and central banks that are highly influenced by political leadership. There's also just China. Although they are the world's second largest economy, it accounts for just 2% of global reserves. That said, China has led some success in using the currency in bilateral international transactions, but that's it. The most significant risk that China poses international acceptance is that it's a controlled currency. The government regularly intervenes to manage its value for its own benefit. Also, China has capital controls, so there are restrictions on the flow of money into the country and out of the country, which is very unappealing for those in international trade. Additionally, China limits the amount of bonds that foreigners can hold. And for a reserve currency, they tend to hold bonds because it can collect an interest on it, unlike just holding the currency. As for the euro, which is the currency for 20 members of the Eurozone, those member states have a combined GDP that is second to the United States and are the second most used reserve currency to date. It makes up about 21% of the total foreign exchange reserves. Furthermore, its central bank, the European Central Bank, is strong, and its financial markets are liquid and robust. The problem lies with the fact that there are 20 separate Treasury departments with 20 different issuers of debt, resulting in no unified debt market. And their goals favor their own sovereignty, not necessarily that of the Eurozone, making it unappealing for those involved in international trade. The dollar is still king today, despite all those recent challenges. It remains the currency of choice for global trade. No other currency comes close. To us, there's minimal risk of it being dethroned as the prominent reserve currency. Thank you for watching. I'm Paul Single, and I'll see you next month.